Gonna work.
There we go.
Moving them a lot faster. Perfect. Okay, and we are live now. So thank you everyone for joining us on our session on starting a business in 2025. I am joined by my friend and colleague Amanda Klassen from LMS ProLink, or just ProLink, I guess now. And she is the resident expert on insurance, and specifically, she heads up the independent contractor program at ProLink, and is a great contact for any of you who have any questions about insurance. So we've got a healthy topic for you today. I'm going to just get my screen up here and we'll kick it off. Again, a reminder for those of you who are joining us from social media, if you post your questions or comments down below, we will make sure to relay those questions over to us live. So we'll do our best to answer them as we go. And of course, if we happen to miss any of those, we will come back and answer them in the post shortly thereafter. So let me get my screen shared. And I believe I'm sharing my screen. Looks good. So again, our session today is starting a new business in 2025. And I just want to see. Oop, that's not what I want. Sorry, technology. Can't seem to figure things out. There we go. On today's session, we're going to be talking about the benefits of incorporating, some of the common mistakes people make while they're setting up their incorporation, some incorporation FAQs. Of course, we'll talk about the importance of getting business insurance, which Amanda is going to tell you more about. We'll talk a little bit about tax planning and structure within a corporation, and then tell you about our free incorporation services for those of you who are looking to get set up. Okay, so a little bit about who we are, who are not familiar with us. My name is Andrew Wall. I'm the managing partner here at CPA4IT, and we have over 30 years of experience in accounting and corporate tax for independent contractors just like yourself. We specialize in helping you organize your finances, create wealth, and transform wealth into a legacy. And we use streamlined accounting processes and services to keep more of your hard-earned money in your hand. And Amanda, do you want to tell the audience a little bit more about LMS and how you guys help independent contractors with their insurance needs?
Yeah, so at ProLink, we're honestly a smaller brokerage out of Toronto, Ontario, but we service accounts right across Canada. We've been specializing in the staffing agency and independent contractor space for about 10 years now. So in addition to working with staffing agencies, we work with independent contractors who are both contracting with staffing agencies and contracting direct with clients at the end of the day. So we've built a very specialized insurance program that can make sure that you guys are covered and it's not breaking the bank.
Yeah, and she's selling herself a little bit short. LMS has, without a doubt, the best insurance program for independent contractors. It is the most competitively priced of any insurance program. We've been doing this, like I said, for over 30 years. And I've seen time and time again, you guys, cut the price in half compared to what most people would pay outside of a specialized program that focuses specifically on the independent contractor market. So, if you're looking around for insurance, you really need to have a conversation before you sign on the dotted line with anyone. But enough about us. Let's talk about why you guys are here, or why everyone is here. Sorry, bad habit. I'm trying to get that out of my vocabulary for 2025. But we're here to talk about the benefits of setting up a business in 2025. And for those of you who are considering setting up a business, you might be looking at the question of whether I go for a sole proprietorship or an incorporation. So I want to talk a little bit about the difference between the two structures. So a a sole proprietorship is basically a sophisticated personal tax return. And you're allowed to deduct expenses. You use a special schedule when you're filing your personal tax return. And you're allowed to deduct expenses. There are a few limitations on what expenses you can deduct, but for the most part, you can deduct the same expenses as an incorporated entity. However, whatever is left over after your expenses, so your revenue minus your expenses is your net income, that's going to be taxed at whatever your personal tax rate is. And here in Ontario, that personal tax rate can go over 53% at the top tax rate. Whereas within a corporation, if you have money left over, you can keep that money inside of a corporation, which pays a much lower tax rate. And it gives you a significant tax savings. In addition, there's a few other differences in expenses that allow you to get a few more deductions inside the corporation, as well as a whole myriad of tax planning solutions and strategies that can be used within a corporation that aren't available to you as an individual. So a lot of benefits within the corporation. So the only real downside is that there is a cost associated with incorporating your business, and there is a cost associated with filing the separate tax return that's required for a corporation on an ongoing basis. And a corporation is a living entity. It has a birth, which is an article of incorporation. It has a birth date, which is your corporate year-end filing, and it has a death, which is an article of dissolution if you ever wish to close down the corporation. But it's a separate legal entity that affords you a lot of additional tax strategies that can significantly reduce the amount of taxes that you can pay. We're not going to go into those in too much detail today. I'll cover them at a sort of a high level, but we do have other sessions where we dive deeper into some of the tax strategies that are available to corporations for those that are interested in learning more about that. There are some, like I say, some additional reporting requirements for the corporation because it's got the separate return. In addition, if you did ever switch from a sole proprietorship to a corporation, you'll need to set up a new GST number separate from the one you used for your sole proprietorship. So you're going to have a filing obligation for the corporate return. You're going to have a filing obligation for the GST, HST return. And you're also going to have potentially an obligation for payroll taxes, which would be any salaries that you're paying to yourself. And we'll talk a little bit more about that in the future here as we get further down the session. One other benefit that you do get with a corporation is limited liability, which means that if you have a creditor or someone coming after you, they can only go after you for the assets that are within the corporation. Whereas if you have a sole proprietorship, all of the assets you own are basically up for grabs if there are any issues. Again, one of the ways to mitigate that, as Amanda will tell you, is there's other types of insurance that you can look at as protecting that downside as one alternative if incorporating is just not a fit for you. Now, to dive a little bit deeper into some of the benefits of incorporation, as we talked about, it does significantly reduce the amount of taxes that you pay. But the other big strategy is that when we talk about helping you organize your finances, create wealth, and transform wealth into a legacy, we look at your corporation as that legacy. The goal is to build up as much money as you can inside your corporation very tax effectively, because the corporation, as we said earlier, here in Ontario only pays tax at 12.2% versus, the highest tax rate at 53%. That's a pretty significant savings of over 40%. The goal is to save that in your corporation and begin to invest that. And when you reach retirement, hopefully you've built up enough inside your corporation that you have a nest egg that's going to generate an annuity or a return for you that you can live off of. And we've got then the principal or the sum that you've saved up as the estate that we can use as the legacy. And so that's what we talk about when we talk about organizing your finances, creating wealth, and transforming wealth into a legacy. That's largely done by using a corporate vehicle. And there's a whole bunch of strategies from, tax-free dividends that you can do in retirement, tax-free dividends to holding companies, loans that you can do from the corporation for the purchase of a home or the purchase of a car. Plus, we have some abilities to smooth income. And again, we talked about these strategies for reducing the risk on your personal assets. So a whole bunch of strategies that are available to your corporation. So if you're looking to set up a corporation, we do always highly recommend that you speak with a knowledgeable representative, such as ourselves or another professional. Of course, there are many people who will go out there and try and do it themselves. So we always want to talk about some of the common mistakes that people make when they go off and try to set up these corporations themselves. So hopefully this slide will change. Mike, I'm in a meeting. Come on. Sorry. And we might have our first question actually that's come up as I'm waiting for the slides to change. So let me tackle that. Does incorporation come with more compliance and regulations versus a sole prop? So compliance, yes, because we do have that additional corporate tax return and potentially payroll obligations. Whereas a sole proprietorship, you will have your GST return, you'll have your personal return, but there's no corporate return and there's no payroll. Although that's not entirely true. There are situations in which you could have employees within a sole proprietorship. So there could be payroll obligations there as well. So it does have some more compliance regulations. Not really so much. I guess you're really looking at the same regulations there, which in the independent contracting world, there's not a ton of regulations. If we're looking at doctors or professionals, there are some more regulations on how the corporation is structured and the names of the corporation. So there are some more additional regulations there from that standpoint. Hopefully that answered your question. If you do have more questions, again, please, I encourage people to post them as we go, and I'll do my best to get to them as we go. Now, I apologize, my slide really doesn't want to change. There we go. Okay, so top 5 mistakes. Obviously not hiring. Oh, now it's gone. No, it's still at the right place. So not hiring a professional is the number one biggest mistake. And again, we have a no-fee incorporation package, so it's not going to cost you any more to work with us than it would be to do it yourself. So avoid that mistake. It's a really easy one to avoid. The second biggest mistake we have is people often use a numbered company. We're not big fans of numbered companies for businesses because particularly in the independent contracting world where we have an issue around something called personal service business risk, where effectively the CRA comes in and says, we don't think you're really a corporation. We think you're a glorified employee. And working with a numbered company can elevate that risk for personal service business because businesses do business with other businesses, not with numbered companies. Numbered companies can be used for holding companies and shell companies and those types of things, but we don't like numbered companies for independent contracting. And again, we have a package that's going to include a name search. There's no additional cost for you to use a named company. So that's, again, a really easy fix, but a common mistake that people make when they often go out and do it themselves. The other thing is improperly structuring your corporation. And this can be everything from having an OpCo-HoldCo structure to who are the shareholders in your organization. Unfortunately, a lot of people set up their corporation the way I install software, which is by clicking yes to every pop-up that comes up without truly understanding what they're clicking yes to. And that can often result in structures that are not ideal and result in us having to go back and redo that. And an article of amendment, which is a process that we can do to change an existing structure, is actually more expensive than the articles of incorporation. So getting it wrong is far more costly than doing it right the first time. So again, that will be solved by working with a knowledgeable professional who can make sure that your structure is done properly. Another thing to be aware of is that there are different people that can do incorporations for you, lawyers or accountants. What I strongly encourage you to do is if you are going to use a lawyer, which I'm totally fine with, make sure you have an accountant as well, because there are things that are important from a legal perspective, but there are a lot more things that are important from a tax structure, which are the things that we're obviously going to be looking at. And if those aren't structured properly, we're going to have to do those amendments, even if it was done by a professional, and that could cost you some additional funds that just aren't necessary. The other big mistake we see is people who fail to prepare your initial minutes and your corporate minute book. So your corporate minute book is required. It doesn't have to be a physical book anymore. Back in the day, we used to have these big maroon books that we had, and people would often lose them. Now we do them digitally, but you must have a minute book. If you ever get audited, you will be expected to provide your minute book and your minutes, which include your initial minutes. And all too often, we see those not done. And then again, we've got to go back and prepare those. Our packages, again, are going to include those initial minutes, and our ongoing corporate tax filings will include your annual minutes and any bonus minutes or dividend minutes that might be required for your corporation. Last thing is the other common mistake is including your spouse as a director of your corporation. And the reason that this is a mistake is if your spouse is not actually doing independent contracting, then adding them as a director creates a fiduciary responsibility, which effectively means any of your creditors can come after the directors of the corporation, your spouse potentially. And there's no real advantage of doing that. The only reason that you might want to have your spouse as a director is if your spouse was doing independent contracting as well. Some of the contracts out there do require that the person delivering the services is a director of the corporation, but that'll be client by client, depending upon your independent specific contract. Now, if we do need to add an additional director down the road, that can always be done. So usually what we say is from a corporate structure, we want your spouse as a shareholder of the corporation, but not as a director. You will be the sole director. And the structure that we like to use for asset protection is all the assets go in your spouse's name, so that there's nothing for them to come after as for you as a director. And then you move all the assets under her name, and you're protected and sheltered through common law that 50% of the assets under her name are also yours and vice versa. And I should say are theirs because, again, I'm trying to get better about my pronouns. I apologize. And so it's just unnecessary to set up your partner as a director in the corporation unless they are going to be doing independent contracting themselves. So we do also have an FAQ document, and I'm not going to get into the weeds of this FAQ document because it is available for download on our website. But we have a lot of questions that people always ask us about why they should incorporate, whether they should do it provincially or federally, and whether they should hire a professional, and how long does it take, and how much does it cost. So if you want to dive into any of those questions, or if you have any of those questions now, feel free to ask them, and I'll do my best to answer them. And on that note, I do have another question that's popped up here, so I'll try and answer this now. And the question is, can you give an example of what goes into the corporate minute book, and when must it be dated? So basically any corporate resolutions that are being made. So with your initial minutes, there's a whole bunch of things that go into that. Your annual minutes are going to have resolutions around directors' fees or dividends and annual bonuses. It's quite complicated. I am not realistically going to be able to answer that and give you a paralegal definition in the time that we have today. But it is critical. And I'm sure you ask ChatGPT and it can give you the lengthy answers. Maybe the best answer I can give you on that now. So all of these FAQs are available on our website. We provide a ton of content that we deliver through our website, through webinars and contents like this, as well as a ton of social media content that we have available to you. So I encourage you to check out our website, not only for the incorporation FAQs, but for two additional documents, which I think are really helpful, which are our calculators. So we have two calculators available for you, which is a sole proprietor versus incorporation calculator and a contract versus permanent calculator. And these are excellent for actually showing you the real question that most of you have, which is, what's the bottom line of how much more money I'm going to have in my pocket at the end of the day by incorporating? So we've talked, a little bit about some of the benefits of incorporating with these, low corporate tax rates, but what does that actually mean to you in dollars and cents based on the contract amount that you're looking at? So we have two calculators, one that's going to show you the difference between a corporation and a sole proprietorship, And then we also have another one that's going to show you the benefits of a contract as an incorporated entity versus a employee. And in that, it's going to factor in things like benefits and those other things. And this is a great tool for seeing the true bottom line of being an independent contractor. And then once you realize that, independent contracting is for you, figuring out which is the best structure for you, whether that be a sole proprietorship or an incorporation. But I've been going here for a while. My mouth is getting dry, and I think it's time that we turn it over to Amanda, who can talk to you a little bit more about the importance of getting business insurance and how you might go about doing that.
Thanks, Andrew. Again, my name's Amanda, and I'm the practice lead at ProLink for independent contractors. I could talk forever on insurance, but honestly, when I'm at a party, it doesn't make me the most popular person in the room.
More popular than the accountant, though.
So, in addition to insurance just protecting you financially, the one little bonus lately, not lately, but for this target audience is how the business insurance liability can assist with reducing the misclassification penalties with the CRA. The insurance policy can demonstrate your independence. You're purchasing your own policy, protecting your own financial interests separate from who you're contracting with. It's reducing your financial risk because you're protecting your entity. And it's black and white. It is providing contractual evidence. So when the CRA is looking at certain factors, it's an actual proof of a document, again, that you're looking into as independent contractor, as an incorporation. We can also insure you sole proprietorship. It really doesn't matter for our program, which route you go that way.
Yeah,
but the key.
Sorry to interrupt you, Amanda.
Yep.
I apologize because this is such a critical factor, and we have glossed over personal service business risk a little bit, but it's the biggest issue facing independent contractors, and their personal service business risk is some specific legislation, and the CRA has actively targeted independent contractors, going after them, effectively saying, we think you're an employee. And they say if you would be reasonably regarded as an employee, but for the corporation. So PSB is specific to corporations, but this risk is also a risk for sole proprietors as well. And one of the main things in defending whether you are or are not an independent contractor is risk for profit or loss. And what the insurance does is demonstrates that there is a risk, because the only reason you have insurance is to mitigate risk. Well, it's not the only reason. Actually, Amanda's got a whole bunch of other reasons, but it's a really important reason of why you have insurance is to mitigate risk. So by definition, by having insurance, you are proving that there is risk for profit or loss, which is one of the 5 most important criteria in demonstrating your independence as an independent contractor. So I apologize. I just felt like we had to hammer that point home.
That's big. And it's really, really a topic that's coming up a lot lately.
Mm-hmm.
Because like I said, there's many reasons insurance is important, but this is a top of mind for a lot of people right now. So these policies that we're providing, and at a very discounted rate, are also assisting in other aspects of business, of reducing those misclassification penalties. If you want to flip to the next slide, Andrew, I can touch on more of the insurance stuff.
There we go.
Perfect. Thank you. So lack of coverage. This is an obstacle we see quite a bit, is a lot of independent contractors assume that they're covered under their client's insurance policy. And that's not always the case. Additionally, even if you are covered under your client's insurance policy, you don't know what you're covered for or not. There's pages of the fine print in insurance policy of what's excluded and what's covered. And if it's not in your hands and in your control, you really don't know how you're covered, or if at all. So that for myself is what I'm promoting too, is by purchasing this your own separate policy, you can read it and you know what you're covered for and what you're not. In the space of being an independent contractor, it's important that you're purchasing the right coverage as well. There's a lot of coverage out there, but you want to make sure what you're purchasing is going to actually cover your needs and respond in a worst case scenario. Our packages at ProLink, we combine together the professional liability coverage and your commercial general liability. Your professional liability coverage is protecting your actions as a knowledge-based contractor, whether you're consulting or IT. It protects if you were to be found negligent in any of your professional work. And the commercial general liability policy has to tie into that because that's a policy that's covering your contractual obligations. If you look through the contracts that many companies require, they want to see clauses like cross liability, waiver of subrogation, and it's what I'm going to call CGL, the commercial general, that meets all those requirements. So it's very important to have both those together. I do see people come to me and they want one or the other, but they need to work in tandem together to properly cover you. Another item that's come to light lately is going online and to self-serve brokers and buying the wrong coverage because you don't know what you're buying. There is a coverage out there. It's commercial premise liability, and it's getting confused with commercial general liability. What the premise liability is covering is if you rented an office space, a 20 by 20 office, and someone came into that space, tripped and fell, and they're going to sue you. That policy, although it might be quite cost effective, isn't going to cover your professional risk and is not going to cover any contractual requirements. So please beware of that. I'm happy. My contact details will be shared. And if anyone has coverage elsewhere and they just want it reviewed, I'd be happy to assist anyone with that too. Let's make sure you have the right coverage. And if not, we can go from there. Because at ProLink, we have two independent contractor programs. We have one which we call ICP, and that's for any independent contractors that are working with staffing agencies. We have 400 staffing agencies on our program. And we also have an association program, which is the APCC. And that's for independent contractors who are either contracting direct with their client or they have multiple contracts on the go because it's an annual policy. So it covers you for the term. And if you want to flip
to the next slide. Yeah, and that's while I'm flipping here, I'll also mention that, we sometimes get asked to review contracts for our clients. And, the natural instinct is to see these contracts, which effectively put all the risk on you, and try to, claw back those contracts and get them to revise the contracts and put the risk back on the end client. In fact, that's not the way you want to go. You actually do want the risk on you because it's again, from a PSB perspective, demonstrates that there's risk for profit or loss, but then you want to mitigate that risk with a program like what ProLink is offering. And again, bad habit. So I keep calling, just so everyone knows, the reason I call ProLink LMS ProLink is because for 30 years, we've been working with LMS as a partner program. And LMS used to be Lou McCabe-Stevenson. And we used to do sessions like this with a guy named Joe McCabe back in the day. And I can't tell you, there is no better program out there. And we've been doing this for over 30 years. And we've seen them all. There's no better program for independent contractors from a cost, a cost perspective, as well as from a setting up the right things that what you need to have in place to mitigate your risks.
Yeah. That I had some notes here. Again, I could talk for hours on everything, but again, when you talk about mitigating risk and people thinking, oh, well, that can't happen to me, or I'm very low risk, I don't need to worry about that. The one statistic I like to bring forward, and we see it happen all the time, is there are frivolous claims. There is someone that's going to put an action against you that's unwarranted in a negligence standpoint, but they feel that they
don't even have to have a case to do that. That's the worst part.
Yeah, they can. And the average cost to defend one of those frivolous claims is $30,000. So unless you have $30,000, saved for just such an occasion, one of our liability policies that it goes by term, you can get for as low as $20 a month. covers your defense costs in a frivolous claim. So very, very important to understand how that can impact you too. You could be perfect and you're still going to get called to the carpet sometimes. Our independent contractor program is, they have it noted here, right coverage, right insurer, right price. We have been working with the same market for years, and they work on the staffing agency side and the independent contractor side. So they're very well versed in what's required from both sides. So they've built a product that responds accordingly. They're also active with us in the independent contractor space. So they know how things are evolving, what the market shifts are, and we've built the product so we can price it accordingly. Like I said, it's as low as $20 a month for our ICP program. The ICP is so fabulously flexible too, because if you sign on for a year, your contract's over in 6 months, we'll refund you back the premium you didn't use, because we know you're probably going to go on to another contract with a different staffing agency. So we've really tried to tailor it self-serve, easy to use, cost effective as possible, because it is such an established program. We get the best rates we can negotiate with the insurer. And at the end of the day, it's covering you for how you need to be covered, because we're in that space every day. Like I said, we know you need the professional liability and the CGL portion. And we're always happy to review any contract requirements that you receive, because we can go through and say, yep, this, your policy ticks you off here, here, and here, versus, okay, well, we might need to work with our solutions department and build a broader coverage.
Yeah, and I'm seeing it more and more as a requirement from end clients as well. I expect that trend to increase. And like I said, cost-wise, this is about half of what I see coming in at the lowest next competitor. So shop it around, you won't see a better price. And that's, and they're a great team who's going to be able to do this for you quickly and easily, which is, again, another important factor as an independent contractor. Your time is money, and Amanda and her team can help you get it sorted quickly and easily if it's important to you. Now, for those of you who are interested in incorporation, I want to tell you a little bit about some of our incorporation packages. Our standard package is $795, but don't let that fret you. We have some special pricing available. We have some no-fee incorporation packages available, which we'll tell you a little bit more about. Of course, if you do choose to work with us, we've got a whole bunch of tax strategies that we can use to help you reduce your total cost by looking at making sure you're maximizing your tax deductions and your tax credits, making sure that the corporation is obviously structured properly and your tax planning is done effectively. And there's a ton of expenses that you can deduct. When it comes to what you can claim as far as a deductible business expense, it does make me think of Schitt's Creek and, what's a deduction? But the reality is a lot of small business owners don't know what they can and can't deduct. And so we've got a whole ton of information. We've got a whole webinar dedicated to all the things that you can deduct inside your business. Here's a sample of some of the most common things, including our fees themselves. Of course, the insurance cost is a deductible expense for you as well. But when it comes to what you can deduct as a business expense, there are three major criteria you have to be aware of. One, it can't be specifically disallowed by the Income Tax Act. And that's the only black and white thing of the three I'm going to give you. But it is black and white. The good news for you is, even though the Income Tax Act is like this, there's not that many things that are specifically disallowed by the Income Tax Act. The things that are specifically disallowed are things like golf green fees, club memberships, life insurance. Now, life insurance, unless it's required by a covenant by a bank, but it is an add back, so there are benefits of having life insurance under the corporation. But that's a complex topic that we do cover in another webinar. So what I say, life insurance, club memberships, and your primary home telephone number. So that's considered a basic necessity. Your long distance, your cell phone, your internet, your call waiting, all that's deductible. But the primary landline is specifically disallowed in the Income Tax Act. Outside of those few things that are specifically disallowed, we do have two other criteria. And the first is that it has to be reasonable. What is reasonable? Well, that's subjective. So what's reasonable to you may not be reasonable to me. And when it comes to reasonableness, I want you to think, could you sit across the table and feel comfortable defending your position as to why it's reasonable for your business? And then the third and final criteria is it has to have the potential to help your business earn income. And again, this is subjective. So when it comes down to it, I want you to have that mindset of looking for ways to deduct everything that you spend in your life, and how can you justify this from someone sitting across the table from them and explaining to them why it's reasonable and how it can help your business. And it doesn't have to be help your business today. It just has to have the potential to help your business in the future. And that could be things from having a meal with your spouse, who is in most people's lives their business coach and their financial advisor all rolled in one. Because I don't know about the rest of you, I don't make many financial decisions without involving my spouse. And they are often all these things rolled into one, but you don't think of them as that. You think of them simply as your spouse. But if your spouse is your business advisor and your financial coach, that opens up income splitting opportunities, that opens up the ability to deduct meals that you have together. It deducts potentially travel costs. It opens up the driving and the automobile expense for going out and meeting with that individual. And one of the things that makes us unique at CPA 4IT is we feel it's our job to educate you on all the things that you can claim, not to tell you what you can't claim. Of course, as a professional chartered accountant, we're not going to allow you to do anything fraudulent or misleading, but we do want you to maximize this gray area and these subjective things, because every dollar that you're able to deduct as a deductible expense is a dollar that you'll pay zero tax on. Now, when we talked about corporations, we did talk about some compliance obligations. And again, we've got the deadlines up here for those of you who are not familiar with it. These are specific to small business. They can change depending on your revenue, but for most of our client base, these are going to be the deadlines. So 3 months after your year end is your HST filing and payment deadline. 3 months after your year end is also your payment deadline for your corporate tax, but in a way that only our government could make sense of is they expect you to know how much to pay before you have to prepare the documents that tell them how much you have to pay, because your corporate tax filing isn't actually due until 6 months after your year end, even though your payment is due 3 months after your year end. So help me figure that one out. If someone can tell me why that makes sense, I'd love to hear it, but it is the rules and you have to be aware of those. We do also have some additional deadlines related to your personal tax, which you would still be potentially either an employee or a shareholder of your corporation, and you would need to file payroll taxes, which if you are taking money out of your corporation in the form of a salary, that's going to be due either January 3rd, 10th, or 15th. I'm not sure why we missed the 3rd on this one, but either the January 3rd, 10th, or 15th for any payroll that was remitted in December, which is the most common period you would remit, or you would declare a salary to yourself. And again, this is one of those things that would go in your annual minutes. Again, we have a whole session dedicated to that. We just did them recently because it's payroll season right now, as you can imagine. You also have a deadline to prepare your T4s or T5s. So T4s are for salary, T5s are for dividends. Those have to be prepared by February 28th. And then, of course, you've got your RSP deadlines, which most of you are familiar with. You've got your family trust return, which most people aren't doing, but is due by March 31st. We have your U.S. personal tax return if you are a U.S. citizen by April 15th. We've got the Canadian personal tax return due on April 30th, which most of you know. And if you are a sole proprietor, again, the government expects you to pay by April 30th, but you don't have to file till June 15th. Another one of those weird situations. So I know out of those deadlines might spur some more questions, such as, how am I actually going to pay myself? Is that going to be a salary or a dividend? I'll gloss over these because, again, we do have a more in-depth session on this. Generally speaking, we recommend for most of our clients during your income earning years that you take the money out of your corporation in the form of a salary. And that's because the salary is going to be eligible for RSP, which means that the more salary you have, the more RSP room that you have. And the RSP room helps you if you choose to contribute to an RSP. It also helps you if you choose to do an employee pension plan or an executive pension plan inside your corporation, which is one of those tax strategies that's only available to corporations. And again, we talk about it in our top 10 tax strategies. But you need to have that RSP room in order for the EPP to make sense. It also allows you to contribute to CPP. And I say allows, I know some people say forces you, but we do like CPP, at least I do, because it's a forced savings. It's maybe not going to get quite the same returns as you might have investing in the stock market yourselves, but it does have a guaranteed retirement plan for you, which you might have to go to South America to live on, but it does give you a guaranteed income in retirement, which as an independent contractor, you've obviously got no pension from your end client or your employer, which quite frankly doesn't exist for most employees either. But this gives you a guaranteed income in retirement. And we have seen people who went the dividend route who didn't contribute to CPP, didn't contribute to their RSPs, and they were banking on managing their money in the stock market. And we've been through a few financial crises now that have ultimately put these people retirement dates substantially further back than what they had planned. So for that reason, we generally recommend salary during your income earning years. Once you retire and you're living off that nest egg and the corporation now only has investment income, we typically switch to a dividend strategy. In retirement, we draw the money out of your corporation very tax effectively with the dividend, and where we can get up to about $30,000 out of your corporation without you having to pay any personal taxes on top of that. So that is our recommended strategy. Again, quickly, just to note that when it comes to the slips that we are starting to file now for the February 28th deadline, which is your T4 and your T5. The T4 is, as I said earlier, for employment income. So if you are going to do a T4, you're right up against your deadline. If this is your very first year, or actually if it's your first or second year, you'll have till January 15th to make your payroll remittance. Because if you are taking a T4, you do need to make payroll tax remittances because you're an employee of the organization. And just like when you're an employee elsewhere, whether that be, McDonald's or wherever else, they're taking money off your paycheck and remitting it to the government on your behalf. As an incorporated entity, you are required to do the same. And like I said, the deadline for the 2024 year is fast approaching. And depending upon your threshold, it might have even passed already. So we've got another question that's coming up here, which says, quick question, is there any limit with how much my spouse can receive in dividends if she recently has been set up with preferred shares in my corp? Plan is to dividend split with her after I'm age 65 to wind down retained earnings. Great question, Rob. Yes, there are, and this is a bit of a complicated situation. So first of all, if you don't set up your corporation properly with your spouse as a shareholder at the beginning of the corporation, you can add them as a shareholder down the road. However, any retained earnings that were earned prior to setting up that person as a shareholder in your corporation are not eligible to be dispersed as dividends to that individual. There's an attribution rule that says that income is attributed to the shareholders who are the shareholders at that time. So only income earned after you set up as a shareholder can be distributed as a dividend to your partner. In addition, the 65 age is a really important thing because a few years ago, the lovely Liberals introduced something called TOSI, which stands for Tax on Split Income. And what TOSI did is they marketed it as a tax on the 1%. It was not. It was an outright lie. It was a tax on the middle class. And what it put in place was rules on income splitting through the use of dividends with family members. So if the family member is a certain age, they have to work a certain number of hours within the corporation to not be subject for this tax on split income. And the additional tax on split income effectively pushes that individual into the highest personal tax bracket, such that there would be no advantage of giving them a dividend. You can still do dividends to them if if they are in these certain age gaps, and there is one from 18 to 24, and then from 24 to 65, and then from 65 onwards. In addition, there are a few exemptions from TOSI, and the exemptions from TOSI are the number of hours that they work, as well as once you, as the primary owner and income earner in the corporation, are over the age of 65, you can then income split with your spouse, even if they are under 65. So you have to be over 65. If they're hit 65 and you haven't, still subject to TOSI. So those are important things to be aware of. So the TOSI limitation, as well as in this particular situation, we have some attribution rules so that anything earned prior to the adding them as a shareholder would have to be dividended or salaried out to you, the primary business owner. So that one's answered, and it seemed to spur a second question from Rob. So follow up: if there was GIC income, passive income, not contract income each year after she got her shares, does that count in what she can get in dividends? Yes, it does. It doesn't matter where the income is generated from. Any income earned after she is a shareholder, she is eligible to receive in dividends. Or that it's not actually that individual, it's that class of shares specifically, and then she would own a certain number of that class of shares. But yes, even if it's GIC income. Okay, so where was I? So yeah, now it's decision time right now to figure out whether you're going salary or dividend. If you do go with the route of dividend, you don't have to make any payroll remittances. You'll just simply owe whatever you owe when you file your personal taxes in April, which is one of the advantages of a dividend. Now to talk to you a little bit about some of our accounting packages for those of you who are interested in learning a bit more about those. We have effectively 3 packages available for you. Not sure. There we go. So we've got our basic package, which is effectively a time and materials package where we do charge a monthly fee of $225, but that's a prepayment towards your final invoice. And we can do whatever you need us to do. And you can bring the information to us in whatever format you want. It can be as big a mess as you want, and we'll take whatever it takes to get it right and get it done. Our 2 additional packages, are exclusive and pro, include bookkeeping. And so these are what we call fixed fee packages. So they will only go above this fee if you go outside the scope of the work. So there are specific scope of work. Unfortunately, we have to put a scope of work because we did find when we first initiated this with zero scope, people would come in trying to take advantage of the programs with corporations that were not independent contractors. And so we have to put some scope of work on it, but they're designed for independent contractors to fit the needs of independent contractors. And there's no reason that a standard individual can't fit inside these packages. So our exclusive is what I call sort of our quick and dirty bookkeeping. Effectively, we're doing your bookkeeping from your bank statements and your credit card statements, and doing all the transactions. We do not require you to provide us the original source document to match. Whereas our pro package is what we call our audit proof package. And that's where we're going to match up every single receipt to every transaction on your bank statement and your credit card, which is why there's a significant jump in price on that one. As you can see, the exclusive versus our basic, you're only paying about $125 a month for bookkeeping, which I can tell you, you cannot find bookkeeping anywhere else in this country for $125 a month. It is by far the best package, and we're able to do that because when we do the bookkeeping and we know we've got we've got information done in a specific format, we can get efficiencies out of doing that, and that allows us to keep the price very, very, very competitive. In addition, if you do happen to choose to work with us, we do have a special free incorporation services. So for a limited time, we do offer free incorporation if you are choosing to pick one of our corporate tax packages. And this means that you can get your corporation business up and running without worrying about any of the fees and costs associated with it, with being incorporated. and you still get all the benefits of those great packages that we have available to you. Now, if you do have any other questions, feel free to post them in the chat now. Of course, if you think of something after, if you're like me and you have a bunch of questions the minute you hang up or the minute we end this call, feel free to get in touch with our care team. You can book a free consultation on our website at cpa4it.ca. You can give us a call at 1-800-465-7532 or contact customer service at cpa4it.ca. And again, if you've got your mobile phone handy, you can scan the QR code. It'll take you right to our booking calendar for you. And of course, I do strongly encourage everyone to follow us on social media where we're always releasing new, fresh content and where we are streaming live right now. Amanda, any final words for you or and I guess one of the things we gotta make sure on the next slides we're getting your contact information on these back.
Yes.
These
Well,
initial
if
slides.
anyone had any questions, they can get my contact information through you. But happy to review anyone's existing policies if they're not certain what they've purchased and they want to make sure they're covered properly as a value-added service.
Excellent. So I'll give it another minute or so for any additional questions that might pop up. But other than that, I want to thank you, Amanda, for taking time out of your schedule to join me today and share with our audience the benefits of working with ProLink and getting insurance for their corporation. And again, I want to thank everyone here for taking time out of their day to listen to me jabber on about accounting, which is boring to most other people, particularly my wife. And again, thank you, everyone. And again, if you are answering live and we missed any of your questions, we'll make sure to come back and get those in the comments below. So I think we're good, Amanda. I think most people are starting to log out. So
Okay.
again, thank you. And I'm going to end the session here and have a great Tuesday, everybody.
Thank you.
You're welcome. And thank you.